Hello everyone and welcome to this edition of Startup Central. I'm Avandabash and this is the only show on Indian television that focuses on startups, technology, innovation, disruption and anything that has to do with the new economy for 1 full hour. So if you've got any unique ideas and you want to share your feedback, pitch to us, comment, and we'd love to hear from you. SUC@etnow.tv, that's where you can reach out to us. Well, lots lined up. It promises to be a jam-packed show, so let's get started then with some of the top stories in the startup universe. Well, we begin with popular dating-focused startup Bumble that's filed its IPO documents privately. After Bumble and Coinbase, companies Roblox, Affirm and Poshmark have made these disclosures as well. The 5 companies will be joining others in seeking an IPO over the next few months, and the Bumble has reached 100 million users earlier this year, and according to Bloomberg reports, could target a valuation of between $6 to $8 billion. Meantime, fintech unicorn Pine Labs has raised funding of nearly $100 million at a valuation of over $2 billion. Lone Pine Capital, Sequoia, Temasek and MasterCard are investors in the startup. With over 150,000 outlets, Pine Labs enables online and offline retail transactions. It claims to process $30 billion worth of payments per year. Earlier, it had invested in Singapore's commerce platform Fave for cashless payment solutions to over 50,000 merchants in Malaysia, Singapore and Southeast Asia. Delhi's merchant payment startup BharatPe and financial services firm Centrum Group have submitted a joint expression of interest to the RBI. This will be done to take over scam hit Punjab and Maharashtra Cooperative Bank. BharatPe and Centrum will hold equal stakes in the venture. It has already lent 100 to 125 crores per month to merchant partners to access.
And Zoom will roll out an update from today onwards, enabling the video calling app to support Apple Silicon Macs. The native code should
support Apple Silicon Macs. The native code could improve the longevity.
Improve the non-verbal feedback that will allow the user to send text messages on a mobile phone Pro license. M1 support will be the most noticeable upgrade with the Apple's new computers to stay in touch during the pandemic.
Computers to stay in touch during the pandemic. And Alexa will now have the ability to do live translations between English and Spanish, German and other languages. Alexa can translate your conversations live and will show the live transcript on the screen of the Echo Show devices. In addition, Amazon has also modified Alexa to handle natural pauses in conversations. This will especially be useful for small businesses as it will allow new employees to get tasks done and customers to request information by just speaking, even if not in English. London-based reporter Rihanna Dridi and at least 36 journalists, producers and executives working for the Al Jazeera news agency faced a so-called zero-click attack. The attack silently hacked the devices without tricking the victims to opening any harmful links. Citizen Lab is the internet watchdog at the University of Toronto, and the researchers found evidence that 2 other NSO customers hacked into a few phones of Al Jazeera journalists, but they could not pin the attack to any specific government. All the top headlines within the startup universe, but getting a move on, let's focus in then on on some big startups. Now, Airbnb and Doordash have had a stellar IPO that would be one of the biggest ones in Wall Street this year. But what kind of an effect will the success of these IPOs have on companies back home in India? Well, we have delivery startup Dunzo's top boss, Kabir Biswas, joining us. Let's get straight to it then. And Kabir, thanks so much for taking time out. Let's start off by talking about what exactly you're feeling about this DoorDash IPO. We're talking about mammoth valuations. It was then revised, very humble beginnings, and the company went on to create history, literally. Does it have a domino effect, you think?
I think the most interesting thing that's actually come out of the DoorDash IPO is what they have been able to achieve in the last 4 or 5 years and the specifics of that. I think the way they went about implementing their strategy, that was about saying that, hey, we are going to chase markets that are going to be less competitive, more profitable. And they were about the third or fourth about 5 years back in reckoning in terms of delivery services in the US. And in the last 4 or 5 years, they've come across as being a 51% market leader. I think some things that become very questionable and teach everybody about what this business is about. One, first mover advantage means little over execution, because execution is the most important part of this business. The second, growth at all costs, which is like, let me just get scale and then I'll figure out as to how to go about doing unit economics, is not necessarily the best way to go about building this business. And the third, that you can actually be very profitable at scale in this business. I think there's been, of course, positive external factors like COVID, etc. But I think largely the discipline of that business and the way they've gone about implementing that strategy is remarkable. And I think what it does is it opens up an entirely new pathway of being able to build delivery businesses that is a lot more rooted in unit economics, a lot more rooted in trying to implement a particular strategy that goes ahead and builds a very large business, rather than just saying, let's go acquire everybody, let's go launch all services, and we will figure at scale as to how to become profitable. So the growth at all cost model is a little questionable, and that's amazing because they've been able to do it in such an efficient and a smart fashion, if anything.
So, I'm sure that 2020 has now forced you, like many other companies, to really look at their unit economics. And then you've got something like DoorDash that comes along. How do you feel about it?
No, I think a lot of what you're seeing on the DoorDash IPO is a function of the last 3 quarters, right? The way it's grown and the way its unit economics have improved dramatically over last year, right? Are a function of what you call the lockdowns as well as COVID's been able to do. In fact, when we look at our own business, I think what we have seen is there's been incredible tailwinds and the unit economics have looked phenomenal over the last 6 months' time. So nothing confusing. It's just that the businesses in India have significantly lower scale than what you can get in other markets, especially in something like the States. But that's just the reality of the size of the market that we're all chasing. But in terms of what the underlying business, has been able to achieve, very similar. So not really any confusion.
Kabir, so I just want to understand, since we're, in discussion about this DoorDash IPO, is there some sort of a ripple effect back home? Do you think that there's some sort of a booster shot that a lot of startups will get with the kind of valuations that the likes of DoorDash have commanded? What's going to be the impact of this IPO for companies in India?
I hope, and this is just generally hope from an ecosystem perspective, is that we increasingly build businesses that are rooted in economics and are wanting to find a way to make money, especially if they're in the transaction space, right? It's very hard to actually make sense of it otherwise, because like, what all are you going to fund? You can't make something for for 100 rupees and sell it for 80. That's never going to be good business. However, whatever the logic on scale, etc., might look like. That, I think, is just something that we should sensibly try and build into all of the businesses that people are starting or are already running. There is, though, a little bit of a cyclic effect that you notice in the capital markets. And that's just something, because I think I've done this like for about 4 odd years, so I've noticed. It seems like every 2 years this switches. So 17-18 was different, 18-19 was different, 19-20 is different. Potentially when if the slowdown starts reversing, you might end up seeing 21-22 look very different. What has actually happened is people's memories, I think, have become much shorter. And you're starting to see cycles that used to take like 5-6 years to play out between exuberance and fear. I think those cycles have become a lot shorter for a lot of people who what you call are deploying capital in the capital markets, private capital markets or public. In our case, private is more important, but the exuberance and the fear is perceivably felt on both sides.
Okay, so I have to ask then, what's the game plan for your company, Dunzo? Is there any IPO? What timeline are you looking at? Are you in talks as of now, or is that going to be somewhere very long way down the road?
So we raise capital, right? It's now an annual affair to raise capital. But no, I think if you were to ask us, given where we are on scale, I think potentially to be able to discuss IPO plans is about a couple of years away. And at that point of time, we would want to figure out the fastest path to be able to get there. It is something that we believe is great discipline for businesses like ours, who have to be rooted in what you call real world unit economics and are able to go ahead and build a business that's actually going to be profitable at scale. In a scenario like that, actually, the whole idea of being able to go ahead and build a business in the public markets brings discipline to businesses like ours. And I know there's been another school of thought that no, you should let companies go ahead and do this in the private markets for a significantly longer period of time, and public markets don't have enough what you call patience to be able to let them build out what version of the world can look like. Not necessarily buying into that school of thought. I do believe that you can go ahead and what you call build really big businesses while being in the public markets, while going ahead and managing expectations every quarter. Because what it does is then allows you to go ahead and make choices that are not made with free capital. They are made with capital that is either being generated by your accruals or has been raised from the public. And both of them actually bring a lot more discipline in the whole organization. Let's be honest, some of the most innovative companies in the world over the last 10 years are actually public companies, right? And they've been able to do phenomenally well while being public. So there is a case to be made for what you call at least very specific transaction, consumer-led, consumer-paid for businesses to be in the public eye and to be able to go ahead and have public investors for them to have discipline while building out a lot of innovation.
Okay, so any sort of if you could just nail it down a little more, Kabir, talk about any milestone or any particular timeline that you have in mind right now for an IPO.
I think we'll have more clarity by, I think, second half of next year, right? I think we'll know our scale as well as we'll have multiple cities profitable, at which I think we'll be able to draw out a timeline. An exact timeline would be, I think, possible only by early 22, I think.
Okay. So what is 2020? What has it been like? A very challenging year, I'm sure, to say the least. But in terms of your customer acquisition, have the costs gone down? What has the experience been like? So
actually, COVID for delivery businesses, and I think it's got to do with the segments that people played in, etc. In our segment, we are largely into daily essentials deliveries. So which means you're ordering from local mom and pop and kirana stores in your geography. And those were the lifeline of every neighborhood that we function in. So we actually never saw a dip because of COVID. So literally Q2, we grew on Q1 by close to about 20-25%. Q3 we grew another what you call 15% over Q2, and Q4 just ending out to be a growth quarter too. Potentially this will be a 2x plus year over last year, even in middle of COVID. So it's actually just had tailwinds, and so for us it's never been about returning to normal to what it was pre-COVID, because we had been very logical in the way we were growing. We weren't actually discounting too much, none of those things. We were just going ahead and making sure that we were growing in a very healthy trajectory. And what COVID did was it just caused like a tailwind that went ahead and increased all those numbers by close to about 20% than what we had expected.
So let's talk about the business at present. How many people are currently using Dunzo in a month? What is your particular what is your monthly overall subscription?
Close to 1 million people a month.
So, you're saying you have 1 million people using Dunzo every month, and you're saying you're differentiating it from Kiranas, etc. So it's not exactly the same. What are you doing getting into food delivery? Don't you think that that's an area that's already competitive enough, and that you'd be probably, sticking your finger into too many pies, and that diversification might not bode well for you in the long haul?
For us, we are running it as an experiment. We actually do think that it's not something, so we plan to run it as an experiment for another 6 months to learn. For us, we keep running a lot of experiments to know exactly what are the things that we want to be able to build out literally 12 months out. And so consistently at Dunzo, if you know the way we function, we have at least 2 or 3 really big experiments running internally. One of them was something that we ran last year, and that's something that scaled this year. That was our B2B part of our business. So I don't know if you remember, but we had gone ahead and created a B2B side of our business where small merchants could actually go ahead and use the Dunzo delivery platform to go ahead and deliver packages, which they were getting orders from other sources. So think of them getting orders on phone calls or them getting order on WhatsApp. And so we truly believe that they should be able to think of Dunzo as a partner, not just for getting orders, but can also think of Dunzo as a partner to be able to get deliveries done for other forms of transaction. That has grown significantly. I think it's grown about 10x in the year. At this point of time, it's close to about 15% of our overall business. And so that's an experiment that we started literally in one city with like 20 odd merchants about 16 months back. And that suddenly scaled, right? The food court one is also very similar. For us, we fundamentally have been trying to understand as to, in the food space, there is no reason why somebody should use us. And so we have been looking for what is an insight that might be uniquely something that we can deliver on. And we will go ahead and test it out, see if our consumers go ahead and have high enough retention. Is it a need that they want? And if it does scale, then we'll then go ahead and scale it in all cities in another 12 to 15 months time. But it's a discipline of running experiments, every 6 months. To say, hey, if it works, we'll go scale it. If it doesn't, we'll kill it, right? But if you don't have experiments running, how will you know what is going to stick in 2 years' time?
So there's food delivery that you're experimenting with. Is there anything else?
What else? We also have a taxi business, which is people can go ahead and use the same set of bikes that's running in some geographies.
Okay, so a taxi business. Now, I want to understand from you, especially during COVID, what did India get delivered the most? Swiggy said that it was phone chargers. What are you guys saying?
At the top of it all, it seems like the set of items that people end up consuming are about 95% similar in a city's neighborhoods. And I'll talk about SKU-led things because the pickup and drop, we actually don't want to know what's getting carried in the package, right? So is phone chargers moving or somebody's tiffin is moving? We are a black box and we don't want to know, and we should not know as a platform, right? Because you should be able to use a pickup and drop service without actually the platform knowing what actually got picked up and dropped. But people are buying stuff from local stores. When they are buying stuff, it is largely daily essential goods and very simple ones, right? Eggs, sanitary pads, 1 kg chicken. They're buying bread once in a while. Milk is somewhere up there. Sanitary pads, as I mentioned, is actually quite big. And also once in a while, pet food actually makes it. And we have realized that the pet food segment is tiny in number, but very high in frequency. And so that actually makes it a top 10 SKUs very often.
Okay, and we've also heard that condom, contraceptive, pregnancy kits, all of those were some of the most delivered items. Is there truth to that?
Correct. So I told you about the top 10, 15, 100%. So all kinds of wellness products do make it. So condoms do make it. Pregnancy kits, of course, make it, right? And there are a lot of other wellness products also that started shipping quite a bit. But the top, 30, 40 products, the real understanding that we had, and which is what's very important, is it seems like urbanized India or people who have moved to urban areas and are doing knowledge work, etc., In the top 50 to 100 SKUs, across the city, about 90% look very similar for everybody. But the 10% is extremely important in terms of their variation, which means in the top 10%, in a Koramangala, it will look very different than what it looks like in a Powai, which will look very different when it will look like in a DLF Phase 5. But a large chunk of the 80% will look very similar. And a lot of our, what you call, solving for the consumer is to make sure that we get that 10% right, because that's really what's making them anchor to a platform and make sure that they're transacting with it.
It's been great chatting with you. Good to know. Thanks so much, Kabir, for joining us and sharing with us your outlook on your IPO, how business is shaping up, your customer acquisition, and of course, the impact of the pandemic. Tell you what, we'll take a quick break right here on the show. Stay with us as we focus in when we come back on the outlook on the e-commerce markets and cloud kitchens, the big disruptor.